What is going on, investors? Hopefully you guys are doing well out there. Walmart reported earnings this morning, and we're going to get into them on today's show. Now, during the regular session, stocks up about 4%, performing nicely. After reporting these Q4 earnings, we'll talk about them. We'll talk about the revenues. What we'll also talk about with Walmart is obviously we've got a lot of inflation in this environment, not only from a product perspective, but also from a wage perspective as well. We'll see how well Walmart is kind of navigating that challenge. And then we'll look at this from a technical perspective. I've got it on a monthly chart. Don't always do that here on the channel, but we got to look at this one. It's kind of interesting. It's obviously flagged out a little bit here. And I tell you what, Walmart over the last 52 weeks has actually held up a lot better than most stocks. The range is just $26 on here, up to 152 to a low of 126. And some of you might say, well, I need a little more risk in my portfolio. Well, some of you probably own Palantir and PayPal and a lot of these stocks that have absolutely been decimated. Having stocks like Walmart can absolutely have a place in your portfolio. And you might be young now, but trust me, one day you will get older, and understanding how these stocks works when you're young actually will give you a leg up by the time you get there. Moving on to the earnings, we had $152 billion worth of revenue. That was up just fractionally year over year, but we did beat expectations by about $2.6 billion. When we look at the financials, we'll see this company has a tremendous amount of cash flows, and they don't have a lot to do with it other than buy back the stock and pay dividends. And they're planning about a $10 billion buyback by the end of 2023. I'll show you that they bought back over about $10 billion worth of shares over the last year as well. They increased their dividend by 2%. Unfortunately, inflation's running a little hotter than that, so you're not really keeping up inflation with that dividend increase, but you do get 56 cents per share on this one. Certainly beats better than nothing. Now coming over to the financials, we see that mediocre growth on the top line, and I say mediocre, it's not mediocre for Walmart. Okay, you got a $151 billion worth of revenue last year. You got about 151.5 in the most recent quarter. Where this company is making some strong inroads is actually in this membership, the Sam's Club memberships, similar to like a Costco business model where they're actually making money primarily on that membership income. And you see that's up 23% from about 1.1 billion up to this $1.34 billion. This is a mega low margin business. You see off the cost of sales off of $152 billion worth of total revenues, cost include $115 billion in those costs. And then you've got operating, selling, general, administrative coming in at 31.4. We notice that these costs are up just fractionally, and you gotta love to see that at Walmart. If they can maintain that and keep this growth rate coming on this top line, well, this company will likely not feel a ton of impact by that inflationary environment that gave you operating income after you take the 152 minus off these costs off of $152 billion worth of revenue. You had just $6 billion or nearly $5.9 billion worth of operating income. That is up 7.3% year over year on a quarterly basis. Year over year on a 12-month basis, we're up 15% on that operating side from 22.5 up to about $26 billion. They pay some interest on their debt, but they flow a lot of these earnings down to the bottom line. You see for the full year on a diluted basis, this company earned $4.87 per share. The dividends slightly over $2.20 at the current time, not including today's raise. So this is a company that can continue to raise that dividend. From a balance sheet perspective, looks absolutely fantastic. Got plenty of cash on the balance sheet, got a little bit of debt. They're managing through that. When we look at cash flows, we'll see that. We've got this net income number at about $14 billion. You add back in things, a company like this has a lot of depreciation because they sink a lot of capital expenditures into opening stores. Those depreciate over time. That's a non-cash charge. You get to add that back in on cash flows. For the fiscal year, you had $24 billion worth of positive cash flow. Last year, you're sitting at 36, so it's a little bit less year over year. You had a big increase in inventories. It could be that they're doing a little bit of inventory stacking over at Walmart. You see evidence of that when you come over here to the balance sheet. Last year at this time, they had about $45 billion worth of inventory. Now they've got 56. I've been seeing a lot of retailers kind of do this, where maybe they're kind of front running. They're getting out in front of the inventory problem so they don't have empty shelves shelves. And so they're carrying a little bit more inventory than they normally would want to. I don't necessarily think it's a sign of slowing demand. I actually think it's kind of more operational. We'll see in subsequent quarters. We'll actually see if this inventory is not being cleared through. It will be a problem, not necessarily for Walmart, but probably for some other retailers out there. But it's something just to think through as an investor. Now, they spent a little bit more on property, plant, and equipment over last year, 13.1 versus 10. And you come down here to financing. They had issued a little bit of long-term debt, about $7 billion, but they paid off about $13 billion. Here's their dividends of 6.152, but they repurchased about $9.7 billion worth of the company's stock. And so they did basically a $10 billion buyback last year, and it's more than likely that they're going to do it for the upcoming year as well over at Walmart. Now, from a technical perspective, this stock was in a monster uptrend, okay? And it, like a lot of stocks, actually from a monthly basis, is actually still in this longer term uptrend. We're flagging sideways. I'll zoom in on kind of the sideways consolidation we're starting to make. Again, this is a monthly chart, so this goes all the way back. The beginning of these candles is actually August of last year, and it moves us into the current time frame, February of this year. If you want to buy Walmart at this spot, I would not blame you, okay? First of all, it's near the bottom end of the range. It's not quite at the bottom of our range, which is down here in 135, but it's within $2 or $3 of that. On top of that, from a monthly chart perspective, you are still in this uptrend. So you are reaching two areas which should act as some support for Walmart. Now, I know the stock markets are taking a dump, and a lot of the speculative stocks out there and some of the unprofitable names and even profitable names like Facebook are getting dumped as well. But Walmart, I think, should probably hold up pretty well. There is room for these types of stocks in your portfolio. And I tell you what, after looking at this technical setup, I probably will be adding a couple of shares of Walmart. When you have uncertain times like these, when the markets are dropping, parking some money into companies like Walmart, into Costco, can be an effective way to stay in the market, realize some gains when things start to turn around. That was Walmart. Hopefully you guys enjoyed today's video. Good luck with your investments.